Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me on set this morning is Tai Wong, who's an independent proprietary trader. Tai, good morning,
Good morning,
happy
Remy.
October.
October 1st. It's the first day of the fourth quarter. It's actually a very auspicious day for our Korean viewers out there as well. October 1st, 1953 was the signing of 71 years ago, the signing of the South Korea United States Mutual Defense Treaty, which has kept the country safe for a long time. So it was a good day, an important day. And auspiciously also, 1908, the first Model T rolled off the assembly line. It was the first sort of really like assembly line made car, and it changed the face of the world really in some ways.
Well, what a fitting open, because we saw quite a stellar performance for the equity averages the first 3 quarters of this year, and year to date the major equity averages are up double-digit percentage points. But as we kick off today's trading session, geopolitics as well as politics are front and center today. We're seeing the major stock averages open lower, so let's take a look at the major averages, starting out with the Dow Industrials. We are seeing the Dow lower by triple digits this morning, off by about half a percentage point, and the Nasdaq Composite Index is leading the way lower, with that index down by over 300 points or 1.7%. Meanwhile, the S&P 500 is extending morning losses, off by 1%, and is down by over 60 points. So, Tai, this morning we got a mixed bag of economic data releases, but first and foremost, there are concerns about geopolitics this morning.
Well, I got on the train, I looked at the market, and what just happened, and it really coincided. I think it might have hit, the headline must have hit a minute after the equity cash opened, where the United States announced that Iran was going to imminently attack Israel with ballistic missiles. And it's a sort of a really inflammatory announcement. I don't know if it's intentional, but when we think ballistic missiles, we suddenly think, oh my goodness, it's ICBMs. I don't think it's going to be anything like that. As a matter of fact, and certainly the stocks have opened sharply lower, because the market opens, you get a headline like that, and the first instinct is to sell, whether it's machines or humans. The first instinct is to sell, and then you can see crude, Brent and WTI are both up well over 3%. Bonds are getting bought, erasing all the losses from yesterday. Gold is up higher. But if you just actually remember back, in April, Iran launched a big ballistic missile attack against Israel, and the United States and Israel basically shot down 99% of them. So, as a matter of fact, yesterday there was an announcement that the United States was increasing its personnel, pretty much Navy personnel in the area. I think we probably have two carriers in the Mediterranean that will probably be in action if Iran does carry out this threat. And it seems it shouldn't surprise, because Hamas has been hit very, very badly. Hezbollah has been hit to an extent that I think people thought would have been possible 2 or 3 weeks ago. And these are Iran's biggest client states in the area. So if they don't hit back, it makes them look weak and sort of helpless. So I think they're probably going to hit back. Question is, what happens if the Israelis and the Americans shoot down all the missiles, basically like they did in April? It'll probably be a retaliatory strike, but it'll probably be restrained. But if something gets through and a lot of civilian lives are lost, a lot of damage is done, then this could escalate relatively quickly. And I think the market's going to be very jittery until they see an attack and see what that attack brings, and if it's more like April or if it's a sort of a new stage. But it makes it for a nervous first day of the fourth quarter for the markets.
Absolutely, because when we see headlines like that cross our smartphones or across the wires, then our immediate reaction is, oh my goodness, what are the implications of this? But as you mentioned, we don't know what will transpire and whether or not, as you mentioned, any attacks will have actual effect in terms of getting through. So I think this is something that we'll be closely monitoring. And Tai, as you mentioned, we are seeing oil prices skyrocket, WTI and Brent this morning up by nearly 3% on the session. But I do want to take a step back and look at what Powell said yesterday, because that's very interesting. So after the Fed Reserve's 50 basis point cut. We were waiting to hear from Powell. He spoke yesterday, and he walked back expectations of a jumbo rate cut in November, didn't he?
He very much did. He said he was in Nashville, and he said, quote, "This is not a committee that feels like it's in a hurry to cut rates quickly. We are guided by incoming data." And it was, I think the market took a little sort of a step back and said, wow, okay, so what was that 50 basis points for? And I guess we're trying to piece together the puzzle after the fact. And it seems like, Powell might, and it's clearly he was the driver behind the 50 basis points with the story by Nick Timiraeus that we spent a lot of time on. So I think he's saying we wanted to, it's a good time to cut now, so we want to take the opportunity and get in a decent cut. But he didn't want to didn't want the market to expect that you're going to get 50 basis points, a number of them from here on in. He certainly said we could if things come in more weakly, but we might not if things come in more strongly. We may even stop. But it was a sort of a reminder that it is not on a preset course. And this morning, with all the stuff going on, it's a little hard to say. But it's 60-40 in favor of a 25 basis point move in November versus a 40 basis point move. I would also add that yesterday, Michelle Bowman, who cast that dissent, had a long speech in front of the Georgia bankers. That was actually really interesting. And I want to, if we can just get graphic 1 today, I went in deeply, looked at what she said, and some of it's really important. And that's why I think she may be the new hawk on the Federal Reserve. Her term actually runs from, it's a 14-year term for all Fed governors, similar to the chair, though the chair position is only 4 years, renewable by the president. But her term, if she stays for the entire term, runs to 2034. She was a state bank commissioner in Kansas and has a lot of experience in government. But let's see what she says in her speech yesterday. And I highlighted some of the important bits. She talked about core inflation uncomfortably above the 2% goal. More importantly, she said, while unemployment is notably higher than a year ago, it is still at a historically low level and below my and the Congressional Budget Office's estimates of full employment. Full employment, or used to be called NAIRU, was the non-accelerating inflationary rate of unemployment, which means the rate at which, if we go below that, it's going to drive inflation because you need a certain number of workers who are unemployed to go and take the new jobs that come up. So that's important. And then the last bullet point, my estimate of the neutral rate, which is the rate of interest rates that balances the economy between sort of inflation and and unemployment, is much higher than what it was before the pandemic. Those are that's very hawkish thinking, a very hawkish mentality. So they want to have to keep an eye on her, but she seems to be emerging as maybe the new hawkish voice on the FOMC.
Well, I'm glad, Tai, that you broke this down for us with this graphic, because those are key points to keep our eyes on. And of course, we got mixed economic data this morning, and that is all ahead of Friday's jobs report, the non-farm payrolls, unemployment rate that we'll be watching for the latest month. And in terms of the JOLTS job opening figure, that was interesting because that was a mixed bag as well, wasn't it?
Yes. So most of the market and it's focuses on job openings, so new job openings. And that was substantially higher than expected, over 8 million job openings from, I think, 7.7 the month before, which looks great. But if you dive a little deeper in that, and it doesn't get much attention, I think equally important, if not more so, is the JOLTS quits rate. How many people have quit their jobs? And that dropped sharply from the previous month, and even though it was trending a bit lower, it dropped very substantially. And it would suggest that people are less confident of finding a new job now, so there are fewer quits. There were also fewer hires as well, even though job openings have gone up. Now, some of that happens with a lag, but you only quit your job if you're, I suppose, retiring, or you feel confident you're going to get another one. So really bears watching. Really a mixed bag, as you say. And also the ISM, the Institute of Supply Management data, came in sort of generally weaker and a little soft. Now, we can't tell how the market really is moving based on that because of what we're seeing in geopolitics. But it's a mixed bag. It'll set up Friday as a very, very important day for the next Federal Reserve meeting and the future path of interest rates.
Yeah, so you mentioned what we saw in terms of the PMI manufacturing figure. We also got the S&P Global U.S. manufacturing PMI, and that also dipped slightly, and it shows continued contraction in the sector. But while we're talking about manufacturing job openings, we get non-farm payrolls at the end of the week and also ADP tomorrow. But I think, speaking of labor, that strike that we've been talking about all week last week and yesterday, that fell into effect at midnight today, so we'll keep an eye on what happens there. And it's interesting to see the initial increase in terms of compensation, wasn't it? 50%, but that got rejected. 50%
over 6 years wasn't good enough. So apparently, as we drill a little deeper into it, the port workers on the East Coast are paid a fair bit less than the port workers on the West Coast. Now, you have to factor in that on the average, living in the West Coast costs more than living on the East Coast. Obviously, in New York, we don't really feel that, but for the rest of the Atlantic coast, parts of the Gulf Coast, it's actually much more reasonable to live than it is in New York and Boston and in the Northeast. So there's a little bit of catch-up sort of required. I think they felt like it, but I think a lot of the sticking point is not just turning down 6 years and a 50% pay raise. Is amazing. They wanted 77%, but the issue I think the Maritime Alliance has is the ILA, the union, doesn't want really any automation. And apparently they walked away from negotiations back in June because they put the Maritime Alliance or the employees put in sort of automatic gates, and they didn't want that. They want, they don't want any new technology. As a matter of fact, they came out against containerized shipping, which makes loading and unloading a lot easier. The head of the ILA said that cost us thousands of jobs in the 70s. So it's sort of a very backwards-looking way of doing business. We're saying we don't want any technological improvements. We just want jobs. And you're really swimming against the tide on that one. So it'll be interesting to see if the president decides at some point to intervene in this. Won't happen for at least a week or two, but if the pressure builds in front of the election, that'll be an interesting sort of two-step.
Yeah, and there are a lot of moving parts to this, as you mentioned, and this fear or concern about automation reducing the number of jobs out there. Do you think that that is reasonable, or do you think now that we're in the 21st century that having automation at U.S. ports is something to be concerned about?
Well, I think if you don't have automation, you'll probably keep a few more jobs, but things become a lot less efficient, and it ends up costing the consumers more. I mean, if you look at all of us who drive, right? How great is now you don't really stop to pay at the toll booth anymore. You have Easy Pass, right? Fewer toll booth takers, but you go through a lot faster. There's a lot less traffic. There's people are working more because they're not stuck in traffic. So that's a good thing. And I think you see it in all parts of our our daily living. You go to McDonald's now, there's no more 6 lines waiting to be served. You go to the kiosk, you punch in your order, and boom, it's there in 5 minutes. So fewer jobs at the front at least, but maybe the more volume is getting more jobs in the back of the shop or the restaurant. So I think historically innovation hasn't been bad for losing jobs. I mean, we have 155 people working. That's a lot more people working than it was decades ago. So I think technology is here to stay. I think this is a fight that they're probably not going to win, but we'll have to see how this strike plays out.
Yeah, definitely. And we've mentioned this in previous sessions as well. With each day that passes with this strike ongoing, then it means billions of dollars for the U.S. economy. And last week when we heard from the Costco CEO on the heels of their latest earnings report, they were saying that they had been anticipating this. And here in the ports in New York City, New Jersey, they had already begun shutting down operations before midnight. I know that you mentioned you saw that there were not as many eggs on the store shelves this weekend.
You know what? Over the past few months, the eggs, sometimes you go into Costco and there are no eggs. And everybody goes, oh, no eggs. And that didn't used to happen sort of pre-pandemic. And even after supply chains were sorted, that was pretty consistent. So, maybe that's just our Costco, but it may be a signal that when things people start running out of sort of essentials or things that make your life a lot better. So toilet paper again. That's going to focus the attention very, very quickly. It's interesting because labor certainly is trying to flex its muscles, and you see with Boeing. Boeing is now considering there's still September 13th was the strike. There, I don't think has been any movement, although there's a mediator, a federal mediator, apparently trying to bring the two sides together. But Boeing is thinking now about they have to raise money. They want to maybe do an equity raise of $10 billion. That's not a great time to do it when your stock is at the substantial lows, lows of the year. But they may have to do it just because they're running low on cash reserves, and they're trying to do whatever they can to keep the stock at investment grade, the company on investment grade.
Yeah, and looking at a company like Boeing, we know that there are a lot of things going on in terms of negotiations there, but it's costing the company millions, hundreds of millions of dollars with each passing day without a deal.
That's right. It's eventually they have, I think, almost 5,500 planes on backlog, so the money will eventually come. But at the end of the day, if anybody who's run a company, who's run a household, it's your cash flow, right? You're not making planes, you're not delivering planes, you're not getting any cash. Meanwhile, there's still a lot of people that need to be, need to get paychecks. That's why they've furloughed folks for a week, a month. The pay cut for the C-suite is not actually meaningful in terms of the larger numbers, but it looks good that the C-suite is following as well. So I think that was a smart move. But trying to conserve cash flow is pretty important when there's a strike. And also for the workers. Eventually the workers who are not getting paychecks, as we creep towards the holiday season, that matters too. So many things will come to a head, probably after the elections, my guess.
And speaking of the election, this evening here in New York City at the CBS studios, we're going to get the one and most likely only vice presidential debate between Walz and J.D. Vance this evening at 9 p.m. Eastern Time. And with this ongoing strike and geopolitical concerns, I'm sure there are going to be a lot of campaign issues that are brought up between the two candidates tonight.
I wonder if it'll be interesting if this will be more of a policy debate or more of a wonky debate than the presidential debate was, based on these two, on Walz and Vance. I don't think most Americans know Walz at all. They probably couldn't pick him out of a lineup until very, very recently. If they had to, they probably never heard him speak. Apparently, he comes off as a folksy Midwesterner. I've never heard him speak. He's been, a very progressive governor of Minnesota. Vance has had certainly more airtime. So I don't know if there's going to be a huge impact, but as we've mentioned before, the election is so tight that if one of them comes off as a much better person to be a heartbeat away, maybe it'll swing a few tens of thousands of votes across the country, which may be enough to make the election very, very interesting. More pressure on Vance, because I think the sense is, Trump's been a little on the defensive since the past debate. He's campaigning purely in the battlefield in the swing states, which he ought to. But it's good. It's a close election. You even see that in Texas, where long-serving Senator Ted Cruz looks like he's in another dogfight for his Senate seat.
Yeah, and it's very interesting, the timing of this VP debate, because in the aftermath of the hurricane down in the southeast, there's been a lot of politicking between Harris as well as Trump. So I'm sure, given the national disaster that happened in the aftermath of the hurricane and how these two candidates are addressed not just a policy regarding geopolitics as well as other campaign issues, but weather-related concerns that are costing millions to the U.S. economy.
Yeah, and a substantial, dramatic loss of life, too, as some of the stories have come out. Really some heartbreaking stories. I saw a headline where there was a photo of grandparents and a grandchild on a roof, apparently just before they were swept away, and really, you hate to see things happen. You can't imagine it happens in a country, like ours, that advanced, but sometimes, nature is nature, and, you can blame on climate change, but when it happens, it becomes very personal.
And we know when unexpected weather-related disasters hit, it costs the economy millions of dollars, and it also speaks to some of the older infrastructure in the U.S., so I am sure that might come up in tonight's debate as well.
Yes, absolutely.
And before we wrap it up, I do want to take a look at what's coming down the pike this week. So we talked about the ADP report coming out tomorrow, the jobs report, but we do also have Fed speeches that we're keeping our eyes on. So
a tremendous number of Fed speakers, and what's great about the Federal Reserve side is they actually will give you the speech, the text of the speech, and not the Q&A, but the text of the speech, and it's typically something in there. So you generally follow them if you're not watching headlines all the time, like I did when I was sitting on a trading desk. You do want to get a sense of where everybody is, get a feel for the pulse. That's why Michelle Bowman's piece was so important. It really gave you, this is what she's looking at, and we actually for the first time in a long time, there are not a lot of hawks on the FOMC. We lost, Esther George rolled off, or she retired. Loretta Mester retired. Before them, we had a lot. We had folks like going back many years, but Alfred Broadus, guys who were really, really hawkish. And now you're like trying to figure out where everybody is. I think Waller is a smart guy. He has a lot of respect. People look at him as sort of flexible at this stage. He hasn't really staked out a position. John Williams came from San Francisco, which typically has historically very, very sort of dovish, as you would expect, dovish Fed presidents, but he became the head of the New York Fed, and he's sort of really in the middle. So we're trying to just get a feel of how this Fed really approaches the economic data. So really appreciate seeing that Bowman speech, and she was very clear on what she cared about, which is she's worried about inflation. She's thinking about where the natural rate of employment ought to be and the neutral rate is, and the neutral rate nobody knows. I mean, Larry Fink actually was on Bloomberg TV this morning, and I wrote it down because he. By the way, BlackRock they have $10 trillion of assets under management. That's sort of the amount of, as we mentioned the other day, 10 trillion in ETFs in the U.S. So they essentially have as many assets as all the ETFs. I mean, some overlap, not exactly, but he said that he thought how the market was pricing the Fed was wrong, and he goes, segments of the economy are very strong. He goes, I think the forward curve is wrong. What the government does on both sides of the government is inflationary. And finally, he says, it's really hard to see another 200 points of decline in short rates, meaning the 2-year rate is around 360, and the Fed funds is around 5. So that's already 150. He just doesn't think that, he thinks the market's getting ahead of itself, and that may dovetail in nicely with what Powell said. What he said is, we're not looking to cut it really dramatically quickly because they raised it so fast. Maybe people thought, he doesn't want people to think that we're going to drop it nearly as quickly, or at least sort of calibrate the thinking behind it. Now, I think Larry Fink, he really wants to be U.S. Treasury Secretary. He may get a shot if Harris gets in. He loved the job, but he's sort of been politically a little bit of a lightning rod. BlackRock's been sort of progressive in terms of where financial companies are, so that'll be an interesting. I mean, an interesting look on if Yellen would stay at Treasury. I mean, she's done a lot of service, so maybe I think she wants to stop and write a book. But he's potentially a Treasury candidate.
Yeah, that could be very interesting. We'll have to see how the elections play out in November.
Yes.
But Tai, as always, thank you so much for joining me. I don't want to get ahead of myself, but you mentioned inflation. So we do have CPI and PPI coming up at the end of next week. So that'll be something to look out for following the jobs report on Friday.
Every piece of data matters right now. Every piece.
Well, thank you so much, Tai. And coming up, we will be joined by Serge Bruckar, the founder and CEO of Atlas Technica, and Dan Ha of Karani Asset Management. Don't go anywhere. We'll be right back.